Hello everyone, my name is Haridharan. My metric number is 255509. We given a task, group task, to do a video presentation on product of international trade and finance of public bank. So my team members is Sangeeta, Vidya, Avinash and Sangeeta. So we choose 5 products from public bank, which is banker's acceptance, letter of credit, charge receipt, documentary collection and overdraft. So before that we should know what is international trade and finance. The financial instruments and products are used by companies to facilitate international trade and commerce. Trade finance make it possible and easier for the importer and exporter to transact business through trade. So I'm gonna explain about bankers acceptance, which is first product for public bank. So what is banker acceptance? It's an instrument representing a promised future payment by a bank. So there's a procedure for creation of a BA. BA also refer to bankers acceptance. First is an acceptance credit facility is arranged with a bank. Second is the requirement documentary evidence of the trade is presented to the bank for the purpose of drawing a BA on the bank. And when the bank is satisfied with documents are in order, the BA complies with the terms of acceptance credit facility and applicant condition for creation, and finally bank will accept the BA. So there is a general condition for creating a BA. First is BA may only drawn on or and accepted by a bank pursuant to an acceptance credit facility to finance to drawers business related purchases from or sales of goods to other person who may be resident or non-resident, evidenced by proper and adequate documentation. The sale or purchase of service should not be eligible for BA financing. There's a following additional activity which may be considered for BA financing. First is purchase of computer software license. Second is companies involved trade related logistic services. Third is purchases of electricity from independent power producer. And last is the bank should not accept a BA that drawn to the finance or sale or purchase of goods, where number 1, the two parties to the trade transaction are part of single legal entity. The two transacting parties are sole proprietorship, operated or owned by the same individual, or where proprietors are in different individuals related to each other. Third is two transacting parties are partnership, which the partners are same individual or majority of the partner are common. So I'm gonna explain about amount eligible for BA financing. The financial value of the trade transaction should be first, in case purchases equal to the amount of money payable by a drawer to the supplier for settlement of the trade, plus other separate payment relevant parties, or in the case of sales, an amount money receivable by the drawer from the buyer the settlement of the trade. Any fee, charges, cost or payment whatsoever payable or receivable as condition for after sales service should not be eligible for financing under BA facilities. So I'm gonna show calculation for discounting a BA. So this is a calculation. The drawer of BA may discount the BA with any person, including the accepting bank, except that in the case of BA drawn, finance purchases which has yet to be paid, the person to the discount BA must be accepting the bank. So now I'm gonna relate banker acceptance to the public bank. So public bank offer a wide range of solutions and services to meet all customer trade and financing needs. There's a 2, local purchases or import services, and the other one is local sales or export services. So for local purchase and import services, banks provide financing for importers and local purchasers so can take delivery of goods faster than meet the market demand. They got an advantage of using this bankers acceptance. You can combine multiple trade documents to make up the minimum financing amount of 50,000. Low charge alleviate. You can still obtain financing for other use even though you have already paid your supplier. Third is good can be purchased without worrying about increasing capital outlay. Finally, period and amount of financing tailored to your business needs. So I'm gonna explain about local sales or export services. Bank will pay you immediately in exchange of your invoices in the trade transaction. This gives you instant cash in hand for other business needs while the bank collects payment from your buyer at the late date. Advantage of using banker acceptance for local sales and export service. You can combine multiple trade documents to make up minimum financing amount of 50,000. Allow you to generate higher turnover by giving your buyers credit term, low charges and device. So this is a example form for reverse of banker's acceptance and front of banker acceptance. So this is the calculation for the BA market. So that's all from me. I'm gonna pass to my other friend to continue to second product. And for you, anyone like to know about BA, you can search in Google. There's a guideline for BA by B&M in 2004.
Hi, my name is Sangeeta Sekhan. My metric number 255888. Today I'm going to present about letter of credit offered by public bank. A letter of credit is a letter from bank guaranteeing that a buyer's payment to a seller will be received on time and for the correct amount. In the event that the buyer is unable to make a payment on the purchase, the bank will be required to cover the full or remaining amount of the purchase. The seller demands a letter of credit because the seller wants more confidence that the buyer will pay. Second, the business troubles or political unrest can delay your payment or put your buyer out of business. Third, the communication can be difficult across thousands of miles and time zones. Lastly, a letter of credit spells out the details so that everybody's on the same page. A bank promises to pay on behalf of a customer, but where does the money come from? Some buyers have to deposit enough money to cover the letter of credit, and some use a line of credit with a bank. In other words, a loan is created when the payment is made. The seller gets paid depends on the types of letter of credit used. The seller might get paid within a few days of submitting document to a local bank. In other cases, the seller will have to wait until certain conditions are met. Sometimes the seller gets paid in advance before shipping or anything so she can buy resources that will be used to produce the customer's good. Advantages of letter of credit. Letter of credit issued by public bank enjoys worldwide acceptance, giving you better negotiating powers even when dealing with a supplier for the first time. It eases your cash flow without the need to pay in advance. Public bank offers minimal charges and it requires minimal documentation. Disadvantages of letter of credit. There are additional costs involved in using a letter of credit as a bank will charge a fee for providing them. The letter of credit bank will likely want security from the buyer or cash cover before it commits to taking on the liability conveyed by the letter of credit. Furthermore, you will be required to provide documentary proof that you have to supply exactly what you have contracted to supply, and the use of letter of credit can be administratively cumbersome and delay the conclusion of a contract of sale. Thank you.
Hi, my name is Sangeeta Sadakumar, matrix number 264518. I will be presenting about another trade financing tool that is provided by public bank, which is trust receipt. As for the definition, a trust receipt is a notice of the release of merchandise to a buyer from a bank, with the bank retaining the ownership title of the released assets. In an arrangement involving a trust receipt, the bank remains the owner of the merchandise, but the buyer is allowed to hold the merchandise in trust for the bank for manufacturing or sales purposes. Next, advantages of trust receipts. First, flexibility in payment to settle early, partly or fully. This will improve cash flow by having additional time to convert your goods into cash. Second, financing for a predetermined period that suits your needs. This will allow to take possession of the goods without having to use your own funds immediately. Third, 100% financing competitive rates. No commitment fee. How does trust receipt work? If buyer do not have funds, so they resort to bank. Bank pays fund against trust receipt. The trust receipt acts as a promissory note indicating that buyer will pay the funds after sales. Buyer needs to keep goods safe and separate from other inventory. In fact, the buyer acts as a trustee for the bank for storing and selling the goods. Even though the title or possession of the goods stay with the bank, the buyer has possession too. The buyer can do anything with the goods or asset as long as they don't breach the terms of the contract with the bank. The buyer can repay bank at maturity date or after selling the products, whichever is earlier. The buyer can also terminate the trust receipt contract earlier. Thank you.
Hi there. Well, I'm Avinash and I'm a key Pandirajan. My matrix number is 264756. So yeah, today I'm here to talk about documentary collection. Documentary collection is one of the main services provided by the public bank Berhad. So yeah, let's see what is documentary collection. So documentary collection is the collection by a bank of funds due from a buyer against the delivery of documents. The bank, acting as agent for the seller, presents documents to the buyer through that party's bank and in exchange receives payment of the amount owed or obtains acceptance of a time draft for payment at a future date. The liability of the bank under documentary collection is primarily restricted to following the seller's instructions in forwarding and releasing documents against payment or acceptance. Next, when should a documentary collection be used? So we see the seller and the buyer know each other to be reliable. Second is there is no doubt about the buyer's willingness to ability to pay. The political and economic condition to the buyer's country are stable. And lastly, the importer's country does not have restricted foreign exchange controls. So next, we are going to see the steps involved in documentary collection procedure. So first of all, as you can see in the diagram, The first process is the buyer and the seller agree on the terms of sale of goods by specifying documentary collection as the means of payment. The exporter shifts the good to the importer and obtains a negotiable transport document, also known as bill of lading, from the shipping agent. And the second is seller prepares and presents a document package to his bank consisting a collection order specifying the terms and conditions under which the bank is to hand over documents to the buyer and receive payment. The third process is remitting bank sends the documentation package by mail to the designated collecting bank in the buyer's country with instructions to present them to the buyer and collect payment. Fourth process, as you all can see in the diagram, the collecting bank reviews the documents, making certain they are in conformity with the collection order, notifies the buyer about the terms and conditions of the collection order. The fifth process is the buyer makes a cash payment and receives the documents and take positions of the shipment. The sixth process is collecting bank pays the remitting bank either with an immediate payment or at the maturity date of the accepted bill of exchange. And finally, the remitting bank pays the seller. So yeah, this is the process involved in documentary collection. So that's all from me. Thank you.
Hi everyone, my name is Vidya, daughter of Atmanathan. My metric number is 255804. Last but not least, I'm going to present about overdraft that offered by public bank. So what is overdraft? Overdraft happens when an individual's bank account balance goes to below zero, resulting in a negative balance. It usually happens when there are no more funds in the account, but an outstanding transaction is processed through the account, leading to the account holders in a debt. A debt is happen because with an overdraft, the bank automatically lends the amount necessary to the process of the transaction to the account holder uh, and a fixed amount that need to be returned along with possible fees. It seems helpful to the account holder, but its costs can spiral out of control if overdrafts are not handled properly. Next is document requirement. There are few documents that need to be submitted by the applicant in order to proceed the process of overdraft. The first thing is a photocopy of NRIC, which is known as IC photocopy. Next is collateral documents. It is based on collateral to be pledged, and income documents. There are few income documents. First is for those who are salary earners, multinational companies, public listed company or government linked company. They need latest 1 month payslip or latest 3 months payslips or latest EPF statements with minimum of 6 months EPF records. Next is for those who are commission earners. They need to be submit latest 6 month commission statement and commission crediting bank statements or latest Form B and LHDN payment receipt. Then third is for those who are self-employed. They need to be submit latest 6 month company bank statement and business registrations document or latest Form B and LHDN payment receipt or latest E-Form B and E-Filling acknowledgement receipt. These are the things every applicant should take note before they apply for the overdraft. The bank may require additional documents if it is necessary. Next is I'm going to show the calculation for overdraft facilities. Here I have a few calculations with an examples. First is the overdraft calculations are there. there are no more people know about the calculations for the overdraft. So the interest rate on overdraft usually reference the balance base lending rate and is calculated on the daily balance of overdraft, which is utilized amount. Public bank base lending rate as 12th May 2020 is 5.72% per annum. Okay, the following is the interest charge formula calculations. So interest charge equals to overdrawn amount times interest rate times rate number of days divided by 365 days. So here is the example. So total overdrawn value is 20,000. Number of days overdrawn is 30 days in billing period of September 2013, and the interest rate is base lending rate plus with 1% per annum. So this is the interest charge for September 2030 is calculated 20,000 times with 5.72% plus 1% times by 30 over 365 days, and the interest charge is 110 ringgit 47 cents for the September 2013. Next is criteria that should be take note before we apply for the overdraft facility. First is availability. It is complicated approval process. Once approved, funds are available anytime without further need for approval. The tenor is a variable with no limit on tenor. Access to facility and credit limit is reviewed yearly by the bank. And then the third is interest rate are higher than mortgage loans, but interest only charged on utilized amount. Next is repayment. Can repay anytime and any amount, but charges will happens to outstanding balance. Last is drawdown amount. Can draw down multiple times as needed. Any amount within the credit limits. Next is advantage of overdraft. When we talk about advantage of an overdraft, it is known as a flexibility. An overdraft provides you the freedom to decide how and when you make repayment, as there is no fixed repayment schedule. You need to know. You decide when you want to settle both the interest and principal amount, so you can work out a payment schedule that works best for you. Next is only pay interest for what you use. You will only be charged interest on the amount that you actually use from the overdraft and not the total amount overdraft limit that you are granted by the bank. Next is disadvantage of an overdraft. Require discipline. It is the main character that every applicant should have in their personality. While the flexibility of an overdraft is a great advantage, it could be also a downside to this facility. If you don't have enough discipline to make sure that you pay it correctly, an overdraft can become a long-term financial burden to you. If you are not disciplined with your payments, you may end up losing the asset you pledged on top of being charged interest. Next is unstable credit line. The bank can withdraw the overdraft facility at any time, so make sure you don't really too much on it. Aside from withdrawing the facility, bank can also revise or change the limit of your overdraft. So because of this, you should always think twice on choosing an overdraft and explore other financial options first. Thank you from us. That all from me, and thank you from us.